Let's talk money, honey. We all use it, we all need it. But have you ever wondered how this simple piece of paper or metal coin became so essential in our lives? Money is more than just a medium of exchange. It's a symbol of trust, a measure of value, and a store of wealth. But have you ever stopped to think about where it came from? The journey of money is as old as human civilization itself. It's a tale of innovation, adaptation, and transformation. How did we go from trading goats to swiping credit cards? In ancient times, people relied on the barter system, exchanging goods and services directly. Imagine trading a sack of grain for a goat or a pot of honey for a piece of cloth. It was a simple system, but it had its limitations. It's a fascinating journey, and the story of banking is right at the heart of it. The need for a more efficient system led to the creation of money and, eventually, banks. Banks became the custodians of our wealth, the facilitators of trade, and the engines of economic growth. Imagine a world without banks. No ATMs, no loans, no safe place to stash your cash. Hard to picture, right? Banks provide the infrastructure that supports our modern economy. They offer a safe place to store money, provide loans to individuals and businesses, and facilitate transactions. No ATMs, no loans, no safe place to stash your cash. Hard to picture, right? Without banks, our financial system would be chaotic and inefficient. Banks play a crucial role in maintaining the stability and liquidity of the economy. That's because banking has been around for centuries, evolving alongside human civilization. From ancient temples that stored grain and precious metals to the sophisticated financial institutions we have today, banking has always been about trust and security. From the earliest forms of bartering to the sophisticated digital systems we use today, banking has always been about one thing: managing our money so we can build a better future. Today, we have online banking, mobile apps, and digital wallets that make managing money easier and more convenient than ever before. This isn't just about dollars and cents. It's about the very fabric of our society. Money and banking influence every aspect of our lives, from the food we eat to the homes we live in, the education we receive, and the healthcare we access. It's about the very fabric of our society. Banking empowers businesses to grow, helps individuals achieve their dreams, and connects economies across the globe. It enables trade, fosters innovation, and drives economic development. Banking empowers businesses to grow, helps individuals achieve their dreams, and connects economies across the globe. It provides the capital needed for startups to launch, for businesses to expand, and for individuals to buy homes, start families, and pursue their passions. It's the invisible engine that keeps the world running. So buckle up. We're about to take a whirlwind tour through the history of banking, exploring its humble beginnings, its revolutionary milestones, and its exciting future. From the first coins minted in ancient Lydia to the rise of digital currencies like Bitcoin, the story of banking is a story of human ingenuity and progress. We're about to take a whirlwind tour through the history of banking, exploring its humble beginnings, its revolutionary milestones, and its exciting future. We'll look at how banking has adapted to meet the changing needs of society, from the establishment of the first banks in Renaissance Italy to the development of modern financial instruments and technologies. Get ready to discover the power of finance and how it shapes our lives every single day. Whether you're saving for a rainy day, investing in your future, or simply trying to make ends meet, banking is there to support you. So let's dive in and explore the fascinating world of money and banking. Believe it or not, the concept of banking predates paper money, coins, even the wheel. The idea of storing and managing wealth is as old as civilization itself. Long before modern banks, people found innovative ways to safeguard their assets and facilitate trade. That's right, the earliest forms of banking can be traced back to ancient civilizations like Mesopotamia and Egypt, where temples served as the first financial institutions. These temples were not just places of worship, but also the epicenters of economic activity. They played a crucial role in the community, acting as both spiritual and financial hubs. Think about it. Temples were seen as safe and sacred spaces, guarded by priests and often located within walled cities. The sanctity of these places made them ideal for storing valuables. The priests, who were highly respected and trusted, acted as the first bankers, ensuring the safety and security of the deposits. It made perfect sense for people to entrust their valuables grain, livestock, precious metals to these religious institutions for safekeeping. The temples had the infrastructure and the authority to protect these assets. In times of war or disaster, the temple's fortified walls provided an added layer of security. These ancient temples didn't just store wealth, they facilitated transactions too. They acted as intermediaries in trade, helping to standardize and regulate economic exchanges. This was essential in a time when there was no standardized currency and bartering was the norm. Farmers could deposit their harvest and receive clay tablets representing their value, which could then be used to purchase goods or services. These clay tablets were an early form of currency, a tangible representation of value that could be traded. This system allowed for more complex economic interactions and laid the groundwork for future financial systems. It was a rudimentary form of deposit and payment, laying the groundwork for modern banking. The concept of using a trusted intermediary to facilitate transactions is a cornerstone of our current financial system. These early practices show the ingenuity of ancient civilizations in managing their economies. In ancient Babylon, for example, the Code of Hammurabi, one of the earliest known sets of written laws, even included regulations for loans and debt. This legal framework provided guidelines for financial transactions, ensuring fairness and accountability. It highlighted the importance of having rules to govern economic activities. This shows us that even in those early days, people understood the importance of financial agreements and the need for rules to govern them. The existence of such laws indicates a sophisticated understanding of finance and the necessity of regulation. These early financial practices and legal codes were the building blocks of the complex banking systems we have today. They remind us that the principles of trust, security, and regulation in finance have deep historical roots. Fast forward a few millennia and we find ourselves in the midst of the Renaissance, a period of incredible artistic, cultural, and economic growth in Europe. This era, spanning roughly from the 14th to the 17th century, was marked by a renewed interest in the classical knowledge of ancient Greece and Rome. It was a time when art flourished, with masters like Leonardo da Vinci and Michelangelo creating works that still captivate us today. But beyond the art and culture, there was a significant transformation happening in the economic landscape of Europe. And what fueled this economic boom? You guessed it, banking. The financial innovations of the time played a crucial role in supporting the burgeoning trade and commerce. The establishment of more structured and reliable banking systems allowed for the efficient movement of money, which in turn facilitated the growth of businesses and the expansion of markets. Enter the Medici family of Florence, Italy. These weren't your average bankers. The Medicis were patrons of the arts, political powerhouses, and financial geniuses who revolutionized the banking industry. Cosimo de' Medici, the patriarch of the family, was not only a shrewd businessman, but also a great supporter of the arts and education. Under his leadership, the Medici Bank became a cornerstone of the Renaissance economy. They established the Medici Bank in the late 14th century, and it quickly became the largest and most respected financial institution in Europe. The bank's influence extended far beyond Florence, reaching into the major cities of Europe. This network allowed the Medicis to finance not only their own ventures, but also those of other merchants and even monarchs. The Medici Bank's success stemmed from their innovative practices. They developed sophisticated accounting methods, including the use of double-entry bookkeeping, which provided a more accurate and reliable way to track financial transactions. This method is still the foundation of modern accounting today. They also introduced the concept of holding companies to manage risk. By diversifying their investments and spreading their assets across different ventures, the Medicis were able to minimize potential losses and ensure the stability of their financial empire. Furthermore, they established branches in multiple cities, creating a vast network for international trade and finance. This network not only facilitated the movement of money, but also helped to standardize financial practices across Europe, making trade more predictable and secure. But perhaps their most significant contribution was the development of the Bill of Exchange. This ingenious financial instrument allowed merchants to transfer funds securely across long distances without physically transporting heavy bags of coins. The bill of exchange was essentially a written order used primarily in international trade that bound one party to pay a fixed sum of money to another party at a predetermined future date. It was the precursor to the modern check, revolutionizing international trade and paving the way for the globalization of finance. This innovation not only reduced the risk of theft, but also made it easier for merchants to conduct business across borders. The Medici Bank's contributions to the financial world were instrumental in shaping the modern banking system we rely on today. Their legacy is a testament to the power of innovation and the impact it can have on the world. The Industrial Revolution of the 18th and 19th centuries brought about unprecedented technological advancements, transforming societies and economies across the globe. But this rapid industrialization wouldn't have been possible without a robust banking system to support it. Factories needed capital to purchase machinery and raw materials. Entrepreneurs relied on loans to fund their innovative ideas, and a growing workforce needed a safe and efficient way to receive their wages. Banks stepped in to meet these needs, providing the financial lifeblood that fueled the Industrial Revolution. New banking practices emerged during this era, such as joint stock banking, where multiple investors pooled their resources, allowing banks to make larger loans and finance ambitious projects. Investment banking also gained prominence, connecting businesses in need of capital with investors seeking profitable opportunities. This period saw the rise of financial centers like London and New York, where banks played a pivotal role in financing industrial growth, international trade, and infrastructure projects, shaping the modern global economy.